When is the right time to buy your first property? A question that many are asking before getting into real estate. Josh Janus's answer would be, right now is the right time. Josh bought his first property at just 22 years old and now has a portfolio worth over 8 figures. I can't wait for you to see how Josh did it. Welcome back to another episode of How I Started. My name is Noah Bacon, and today's guest is Josh Janus. Today we're going to discuss how you can get started in today's market and how you can overcome analysis paralysis for those extremely high returns. Josh, thank you so much for joining us today.
Hey, thanks for having me. I appreciate it.
Absolutely. So Josh, like I said, you've had a really amazing intro to real estate. You've grown your portfolio tremendously over the first couple of years, but I want to slow it down here and just ask you, at 22 years old, what got you excited about getting into real estate for the first time?
Yeah, so I saved up some cash from the various entrepreneurial ventures that I did in high school and grade school. So I had some money in the bank. I transferred over to Ohio State University to study computer science. And I knew I'd have like a good paying job coming out of that if I could figure out a way to graduate it, because I was not naturally good at it. So I wanted a house hack. I wanted to buy a duplex, live in one unit, and rent out the other. So I was looking for people in Columbus to help me. And I came across Remington Lyman, who was pretty active on BiggerPockets at the time and still is, who was an agent and investor in Columbus. So I reached out to him asking for help. We hopped on a Zoom call, and I eventually came into his office to try to see what was going on there. And I saw all these guys. It was like the Boiler Room movie setup. If you've ever seen that, it was like 20 guys banging the phones, getting after it, trying to put deals together. There were kids that owned multiple homes under the age of 25. And I was thinking, doing the math and what my trajectory was, I'm thinking there's no way at all that I could ever get that with what I'm doing right now. Let's try to give this a shot. So yeah, I decided to dive full into it, started cold calling to find deals, and it all grew from there.
That's awesome. So you got your intro on the transactional side of things, saw a lot of investor-friendly agents, it sounds like, that were not only doing deals for their clients, but it sounds like they were doing deals in their own portfolio as well. So can you tell me about what you were doing from the transaction side of things that got you excited to become an investor and get over that hump then?
Yeah, so I was originally cold calling to find a duplex for me to house hack in an area that what I could potentially get into. My price point was like 250, and I was calling it where most things were selling for like 350. So I knew there was a shot that I wouldn't be able to afford it. And the first one I found was a 4-unit for around 450. So I wasn't able to purchase it, but I brought it to the realtor that was helping me out at the time, and he found a buyer, and it closed. I made a marketing fee for helping find that deal, and I just took off from there. I continued to cold call very consistently on a schedule, 6 days a week, trying to learn from my processes, and ended up closing a bunch of deals around 6 months in. Then I took that cash that I had made and saved up, and then I bought my first deal very soon after that and started a BRRRR method strategy.
Awesome. So you obviously found your strategy right away, built up the capital for a down payment. Can you tell me what that property looked like? I know you said you were looking to house hack, but what was the exact layout of it? Was it a 2-unit, 4-unit, small multifamily?
I decided to go more so the risky route with a bigger reward because I was building up a good monthly income for what I was doing. So I was actually calling in Cleveland, and I found a duplex for $85,000 that was not livable, that needed around $35,000 of work. That's what I thought it was going to need, but I ended up finding a poor contractor. So I purchased that, started the rehab, had to switch contractors like 4 months in after a bunch of not fun stuff, and ended up finishing the project, refinancing out. And I just have continued to do the same process over and over again and tried to get better at it every time.
So before we get into, the hiccup that you had there with the contractor, how did you fund this first deal? I know you had the down payment saved. Did you go the traditional conventional route, or did you look for different financing options?
So for houses that aren't livable with busted windows, holes in the wall, floor issues, whatever the case may be, you tend to have to either pay cash, borrow private money, or go the hard money route. So I borrowed hard money. If you have a 650 credit score, 20 grand in the bank in a heartbeat, they'll probably give you the money. The regulations aren't that tight on it. They funded the entire rehab. I had to put around $15,000 to $20,000 down, and I was off to the races, trying to figure out how to get this house to a livable condition.
And then obviously had a successful refinance then to pay off the private lender. And then did you refinance into a conventional loan then?
Yeah, so at the time I wasn't lendable still, so I couldn't go with the conventional route. So I did a DSCR loan, debt service coverage ratio loan. So it just depends on as long as the property's income supports the debt service, so PITI, principal, interest, taxes, and insurance, and if there's a little bit left over, they'll probably give you a loan. And at the time, I think my rate was 8.75, 30-year fixed on a 5-1 arm. So that's mostly what my exit strategy has been on these BRRRRs.
So, with the initial intention of house hacking, when you refinance, were you living in the property then, or did you refinance and then you have both units filled and it's truthfully now an investment property?
Yeah, so I was living in Columbus, so this was actually just a BRRRR investment property, so I rented it out. And the majority of what I've been buying is in Cleveland. I'll do some stuff in Columbus as well, but I haven't house hacked, and I probably won't. But I still think it's an effective strategy for at least most people.
Yeah, awesome, awesome. So you live and true by the Burr method. So you gave me a little golden, maybe not golden nugget is the right term, but you said something that you had a bit of a contractor issue there. It took about 4 months to get the property up to from distress to functional and now ready to refinance. Can you talk to me about what that looked like and what the outcome was for you when you found that right contractor?
Yeah, so I was actually 4 months in with the house, maybe 40% done, and the contractor was lying to me about what he was doing. He didn't even go up in the attic to notice that there were live wires running on the wooden attic floor, which is a massive fire issue, and I'm surprised the place didn't burn down because I was doing all this remote. I was living in Columbus at the time, trying to build systems so that I could do it remotely, which is definitely risky if you don't have reliable people on your team. I brought a new crew in. They bidded it about $20,000 over what I originally was willing to spend. That's fine. That's why you have to buy deals with margin, meaning there's a good spread between your price plus rehab. So that's on one side of the equation, and then the ARV, what it's worth when it's done. You want there to be a good spread between those two numbers. That way you can make mistakes and you still don't really lose money. You just put a lot of time and effort into something and maybe you don't make a lot, but you certainly learn a lot for your next one.
Awesome. So, obviously being completely remote from the situation, were you changing your processes a little bit then when you had the new crew in? Were you doing more site visits more frequently, or did you just kind of have that same, lack of a better term, like passive trust when you had that second crew come in then?
So I started to pay my property manager to drive by it and check it out on a more consistent basis. I was doing more due diligence before sending more draws, and I was physically going there a little bit more often than what I was doing before. So yeah, I definitely tightened up on my systems, and I found somebody who was better, but then they ended up falling off. So I had to find a third crew that is now my main crew. But yeah, don't give too many projects to contractors because they're always going to take more than what they actually can handle, in my experience. And then all of a sudden, everything's slowed up and you're paying the bills.
So what did you learn from this whole contractor situation? Do you still use that third crew today, or did you kind of outsource things a little bit differently and keep more of a high alert when you're putting in higher dollar amounts for these bigger turnovers?
Basically, I have my property manager do the same thing. He walks through, he'll check it out before I send the final draw to end the project. And then I have a project manager below him that checks things before every draw previous to that and make sure everything's organized. Because I actually have 70 people on my team now that work full time on the houses that I buy, renovate, and either flip or sell. So I'm always working on like 15 to 20 houses. I basically just took one crew, added another, added a third one, then threw a project manager above those crews to run them, and then added another 2 to 3 crews on the side and just control the chaos on a daily basis.
So, looking at this deal, it was a couple of years ago. If you were looking at it today, would this deal still work on paper? Would you look at it a little bit differently? Have you gone for bigger rehabs to make numbers work? Can you talk to me about how that deal would look today?
Yeah, so I bought that like just over 2 years ago, and I would buy the deal again. I would have been able to probably rehab it around 45,000 versus the 55 that I spent. I've actually bought 3 others on that same street. I just try to do the same deals over and over again. That way you know what you're getting into. The more that you understand, the more that you know, the more you can control. All of that leads to less risk in the process, and you can take on a lot more predictable exit strategy deals. So it doesn't feel as stressful when you're taking on value add real estate.
Yeah, and it's clear that your comfortability has clearly gone to a different level with it. If you've done, like you said, you've done 3 houses on that specific street, it's going to be almost like carbon copy, cookie cutter for you now moving forward. So let's speed up to today. So, it sounds like your portfolio, you've gotten a lot more comfortable having that automation now. It's not that they're cookie cutter, but is that the method behind the madness of a $15 million portfolio, is that I've really stuck to the same processes on the same types of properties?
Yeah, it's like the definition of insanity, but in a good way. I just keep doing the same thing over and over again and trying to get more efficient at it and quicker at it and less expensive debt on the purchase and less expensive debt on the exit strategy, getting more better quality work done when I'm trying to flip something, because you definitely need to have, all your I's dotted and T's crossed when you're flipping a home versus when you're renting it. It's essentially just trying to make everything more efficient and controlling all of the contractors that are involved.
The question I ask everybody, the title of this series, How I Started, we like to ask our guests, being in your shoes a couple of years ago, that's where our audience is today, trying to buy their first deal or, just aspire to be a real estate investor. Can you give somebody advice today on how they can, get started and follow your footsteps that you clearly have laid out over the last 2 years?
Yeah, I'll just kind of say how I started. I read a lot of books on real estate and finance on Audible when I was DoorDashing driving around. And I think that foundation of education in those areas made a huge impact when I began to make money and began to save it and when I was ready to invest. It gave me a level of confidence that I wouldn't have had without that. If you have the ability to house hack, if you're younger, or it doesn't really matter, but if you're in a situation where you can buy a multifamily property, live in one unit, rent out the other, do that as many times as you can handle, because that's going to be a bunch of built up equity and cheaper debt over the years that you can begin to depreciate and pay down. There's a lot of tax advantages to that as you grow the portfolio. Yeah, get yourself educated, save. Like, save as much money as you can. Once you start doing value add type investing, flips, BRRRRs, any form of value add, things go wrong. They will. And it's so hard to have something go perfect, especially the first time. So you always want to have cash to account for utilities or going over budget or something gets stolen or the house gets broken into or the ARV comes in lower than what you were expecting. And don't view those things as failures. View those as, all right, I'm not going to do this again. Here's what I learned. Here's what I'm going to change. And if you approach that with every deal you take on, you're going to do better and better with every deal that you buy.
That's awesome. It's amazing advice. And Josh, I really, really can't thank you enough for your time here today. Is there anything else you'd like to share with our audience before we wrap up here?
For sure, yeah. No matter where you're at in your real estate journey, feel free to reach out to me. I'm happy to answer your questions or hop on a quick Zoom call. I'm Josh Janus on BiggerPockets.
Josh, thank you so much for your time today. If you're looking to learn more about Josh Janus, you can find that information in the show notes below. We'll have plenty of information about Josh and where you can find him. And if you're looking to connect with me, my name is Noah Bacon. You can head over to the BiggerPockets website and find me there and find plenty of resources on how to get started. Please like and subscribe to the Real Estate Rookie channel and the How I Started YouTube series here. We'll have plenty of more stories just like Josh on how you can get started in real estate and produce high income right off the bat. Thank you so much, and we'll see you next time.